Good afternoon, good morning, good evening, everyone. Taking a look at, it's the 18th of May, 2021. Taking a look at Cardano here. I want to spend some time doing a little bit of longer term analysis. So let's just clear this up a little bit here. Get rid of everything except for just the candlesticks, okay? And I want to wipe out all of the Fibonacci retracements. So right here, without even adjusting this, there's a Gartley harmonic pattern inside of this that looks very much like a crab or a deep crab. Essentially, the pattern suggests that there is an extensive move that really extends to above the prior high, and this would be a bearish crab setup, and that we would anticipate a move to the south at some point. If we were to look at this as a move from, if we were going to say that up here is X and this is A, then what we're looking at, I need to add the extensions on here. I think it's 2.212 is the, or is it 2.618 is the extension? I can't remember off the top of my head, but that's all right. We really don't need to know the exact level. We just want to get kind of a general idea. Okay, from a logarithmic point of view, that level, the 1.618 is up at 10. I don't think that that's likely. 1.272. Actually, let me just pause this real quick. Okay, I did check it out. So, in hindsight, because hindsight's always 2020, this structure actually looks, and I was thinking about this when I was first talking, this looks more like a cipher pattern, except it's invalidated because we don't, we've exceeded this prior high. Now, regardless, structure-wise, I mean, you don't have to be, if you're trading harmonic patterns, you better be pretty exact, because Scott Carney has specific rules attached to them, and you need to follow those rules. I kind of look at the structure, and I do trade harmonic patterns, and when I do use them as a part of my overall trading, I do follow them to the T. But I like to look at the overall structure because harmonic patterns really do give us a kind of a more detailed structural map of how things move, as opposed to just Elliott Wave theory. Speaking of Elliott Wave theory, we do have a little bit of that in here, but what I'm saying is that this is structurally more like a crab pattern, a bearish crab. It's a bearish crab because the extension of the move here becomes bearish and we see a sell-off. However, in the crab pattern, the bearish crab, the minimum that this has to go to, and by the way, this is what it looks like. So this would be where X is at, and then we have A, B, C. I think we go to the 886 is about the lowest you go on the crab pattern. But then the 1618 is the minimum it has to go to because it can extend all the way up to the 361.8% move. So this is at $10. It's dangerous to say this about cryptocurrencies when you're like, I just don't see that happening. I don't see that happening, but it nonetheless is something we should look at as a possibility. I was talking about Elliott Wave, and in Elliott Wave, we look at things moving in in fives and threes. So in Elliott Wave analysis, we look at a primary impulse move looks very textbook like this. Now, we could be at the end of this move. We could be, but, and I've been doing this ad nauseum, I really want to use my fib extensions because it's going to tell me, fib extensions are probably the best tool that I know of to project a future resistance or support level that has never been traded before. That's what I feel like with these kinds of things. So the fifth leg, there's a confluent zone. We've looked at these before at $5.75 and $5.11. And then we have another one up at $9.06 and $9.56. that is more closely, this price level up here is more closely aligned with that bearish crab pattern, but the near term zone up here at the $5 range, that's what we see. On the smaller time frames, we have seen the $3 level as a normal stopping point. I don't think the fifth leg will extend this that far to 9. I don't even think it'll extend to 5 or 4. I think we'll get halted around the $3 to the lower end of the $3 range, and then we would see a corrective move, probably down to at least $1, perhaps lower to 80 cents. So that's essentially what, because a corrective move will, let's just assume that it comes up to $4, and a corrective move looks like this. You see the sell-off, and then you see the kind of the relief rally, the bounce, and then you see the drop again. All right. As soon as we know what the top is, if we were going to assume that this is that we have the top already, we can identify a fib range that's appropriate to look at a support zone. Starting right here. And then we look for the strong bar of the move. We don't go to extreme anymore. Free advice. This is the strong bar. Is it though? Let me just make sure. That move is that. No, yeah, I was right. Just couldn't remember off the top of my head. So this is the strong bar of the move. So yeah, C coming down to 65 cents or even 48 cents. I know that seems a little weird, but you got to think of, you can't think of this as a linear chart. You can't think of it like, oh my gosh, that's crazy to think going from $2.50 all the way down to 48 cents. That just is not likely. It is though, because we're talking about measures of proportion. We're not talking, you can't look at a market like Cardano or Bitcoin and think of it in normal, like linear dollar moves. You have to think of it logarithmically, proportionally. And so that's what this is. That's what this move would look like. We would see it dip down quite far. We could only go down to 382 to the 90 cent level. It's near $1. We could, but more than likely, I mean, you're going to see it probably test below $1 at least, at the very least. Near term, I want to take a look at our point figure chart. So going into Wednesday's trading, let's take a look at these charts. So down below, this is the 5 cent 3-box reversal chart. This is a very strong, this is on the bottom left, I'll maximize it. This is a spike pattern. Spike pattern is any column with 15 or more O's in it. And there's a short. We would look at taking a short on the 3-box reversal at 175 even. Let me just put that spike pattern. And probably only want to do 50% of the range with a target around 150, or sorry, 1, 2, 3. I'm just eyeballing it. You could probably figure it out. Yeah, around 155 is probably where you'd want to look at that profit target on any short. I'm not interested in shorting though. Then we have the 1 cent 3-box reversal chart. So this one's really interesting. I mean, you probably saw it on the other point and figure chart that we haven't looked at yet, but there's a pretty standard bull flag pattern going on here. And we had a triple top, broke above, double top, failed to move higher, double bottom, dropped down below. This is going to be, so the dominant trend now is bearish according to this point and figure chart. So our entry, the 3-box reversal, sorry, not the 3-box reversal. Oh, it actually, 1, 2, 3, 4, 5. Oh, okay. Well, there's two options. There's two options here. So there is the option to enter at the 50% of the range, which would be at 2065. Or that's aggressive, or it's waiting for a return to 215. So there's an aggressive entry opportunity. At 2.065, and then the conservative is a break of a triple top, which is a very, very nice entry. The conservative entry is at 2.15. Reason why this is so bullish right here for an entry is that it's not only a break of a triple top, it breaks the bear market, and it turns into a bull market. And that would come after a massive sell-off. It's not a bear trap or a head fake. It's or fake out. It's just a really clear rejection of any move lower. So that were to occur. Going on to the 20 pip 3-box reversal chart. I mean, this is the one where you can see there's a clear a bull flag pattern going on here, and we've had this. I consider this a catapult. I think Jeremy Duplessis' work, he only identifies a catapult as a move that starts with a triple top, but I see a double top and then a move higher that has failed to continue higher instead of seeing a reversal. This will turn into a bull trap if it moves down to 195. 196. If it moves down to 196, then we have a bull trap. But I like looking at that entry at 216, which is really what we just looked at. So, and the profit target on that would be at 240. And then from there, I think you'd want to wait to see how price action operates as it gets towards those all-time highs. But that is my kind of deep, detailed analysis here, and we'll leave it at that. From all of us here at Exchange Rates UK TV, thank you for watching. Please don't forget to like and subscribe.